Hello, it's me. I'm still alive. I have not made a video for quite a while, so sorry for that. But things have been quite busy. But today I want to take a few minutes to talk about a very, very important topic in trading. And I'm sure that many of you will be able to relate to that. Just ask yourself, how often did you take a trade where you know you should not be in, but you ended up taking it anyway? And then, of course, what happened? You got what you deserved. And this is a very common theme. And whenever I work with our premium students, I often see that it's not about the trades that are easy and that they jump at them right away, but the trades they know they should not be in, the trades that they take unnecessarily, where they break their risk or where they break their rules. Those are the ones that really mess up the performance. And I've always seen that once a trader realizes that he has to trade less and he has to be more selective, then that's really where he sees the big jump in his performance and his overall approach. And also trading becomes less stressful because you only take the good trades. The bad trades, which cause a lot of stress and uncertainty, they fall away for the most part. Obviously, sometimes we will still have slip-ups, but that's okay. So I want to take a few minutes to give you 10 tips on when to trade less, the scenarios where you should be really, really cautious, should you really enter the market, and this will then have a very big impact on your performance. So the first one is you should not take a trade when you have to think too long about a trade, especially if you have some experience with your system. If you have been trading it for a few weeks or months or even years, then the good trades, they will jump right at you from the charts. There's nothing like you have to think about a chart and you have to think about a trade. Is this a trade? Is this not a trade? Yes, maybe no. The good trades, you will know that there is a good trade. Also, Moritz always says that ask yourself, do you really love that trade? Do you really have everything that you need from your system, all the rules? Do you really love that it's a perfect signal, or is it a perfect trade? And if so, pull the trigger. And if there are some doubts, then either avoid the trade completely, which is usually the best option, or reduce the risk significantly. The next and the second point is when you don't have a stop loss placed. So even though sometimes you have a good valid entry signal, you don't really understand or you don't really know where the stop loss should go, or you know that the stop loss actually should go too far away. It would ruin your reward to risk ratio, but you still end up forcing it. You end up managing the stop loss in a bad way. You maybe set it too tight for the setup, and you know that's not the optimal scenario. Actually, you should have used a wider stop loss. It would have ruined the reward to risk ratio, and in such a case, it's also okay to skip a trade. Even the best setups, sometimes they are not tradable if the reward to risk ratio is not great enough. It's a very, very important point. And just understand that in your trading career, if you want to do this for the next 5, 10, 20 years, you will take hundreds or thousands of trades. So don't worry about missing one trade, even though it might look good, but you don't have everything around it. A trade is more than just an entry, and everything has to fall into place for a good trade. When the market does not favor your system, very, very important. Many traders make the mistake that they want to trade all the time, regardless of what the market is doing. And it is very important that you understand the premise of your system. Are you a trend trader? Then you should avoid low volatility, tight range markets. Do you normally look for markets where you have orderly price action? Then you should avoid markets where you have big swings, large wicks, lots of volatility, uncertainty. Really understand what is the premise of your system. Are you a trend trader? Are you a breakout trader? Do you require high momentum, low volatility, high volatility? And what is it that you need from the market? And then you can become even more selective. You don't only take the setups that look great, but you also have a market that is really favoring your system. For me, it means that I trade around 35 Forex pairs plus some futures and CFDs, but every week I only end up with 3 to 6 trades. Why is that? Because I'm very, very selective. I filter out all the markets, all the pairs that I'm not interested in because the market is not right, the conditions are not right, and then I also only take the best trades that jump at me. When you want to play catch up, very important and a very bad position to be in. How often did you have a period of losing trades and then you say, okay, I just need one big winner and then I can come back to break even. And what happens? You end up forcing a trade because you just want to get up to break even, you want to leave those losses behind, and you want to move on with a clean balance sheet. That's not how trading works. You have to accept that winners and losses, they come randomly. But if you follow your system, if you have a good system, if you have good expectancy, if your reward is a good size to the risk that you take, then over time you should have a positive account growth if your expectancy is positive. But you have to avoid those situations where you just tell yourself, I just want to get back to break even and then I can move on. That's a very, very bad spot to be in. Number 5, if your best entry is not available anymore. What does that mean? Sometimes you see a setup but you doubt it. You say, okay, it's a setup, but I have lost in the last 2 trades, so maybe I'm a little bit more cautious. And then what happens? The market runs away, the price goes in your favor without you, and then you say, oh man, I should have taken it, but maybe it's not too late. But what happens? You jump on the train too late, you chase the price, you get a worse entry price than what you should have gotten, which of course means the reward is smaller, the risk will be larger, and that is a very bad spot to be in. This is especially true for traders who use indicators like the stochastic or any other indicators where you deal with overbought and oversold. And many traders, especially if they miss a big move in a big trending market, they will become itchy, they want to get in a trade, they see what they have lost or they have left on the table, so much potential profits. And then they tell themselves, okay, this trend must end at one point anyway. The trend cannot go on forever, and you probably all have heard that, or you've probably told that to yourself. But it's very important to understand that a trend can go on for a very, very long time. So don't get into a mindset where you're always trying to predict the next trend before it happens. If you see that you have missed a trend, if you see that you have lost or left a lot of money on the table, understand that, accept it, and move on. What I like to do, especially in my beginnings when I was struggling emotionally, I used to close such a market when I saw, okay, this one, it's making me feel a little bit itchy because I want to get in and I want to get back my potential profits which I've left on the table or which I missed out on. So I closed this Forex pair or this market for a few days, maybe a week or 2, and I will forget about it. I'm not confronting it, and I'm not getting into the mood where I end up forcing a bad trade. So close it, forget about it, and move on. And then when you come back in a week or 2, things will look very, very differently. When you haven't done your analysis, this is especially true if you are on the 1 hour, the 4 hour, on the higher time frames, where you usually work with trading plans. For me, for example, every weekend, I write down all my trading plans for all the Forex pairs and all the futures, all the CFDs, and then I just follow the trading plan throughout this week. If I see that the setup is not really there and it's also not in my trading plan, then that's where my alarm bells go on, because I know this is not a trade where I should be in. If I haven't done my analysis, if it's not on my trading plan, it's not on the trading plan for a reason, and you need to stay away from such a market, because there is something which in your initial analysis you found that made you aware that this is not a real setup, and also forces you to become a little bit more selective, to become a little bit more disciplined when you always force yourself no trade without a trading plan. When you rely on someone else's opinion, this is especially important if you act or if you are around a lot of traders in trading forums, especially if it's a trading forum where everybody is just inputting their own opinion. If the traders have different strategies, different setups, if everybody's just throwing in their opinion with charts, or if you are on social media where everybody posts random screenshots, you don't really know what is the rationale of the trader, which system is he using, which time frame is he trading, why is he making this trade or this analysis. If you rely on someone else's opinion, traders like to do that. I understand that, because you give away the responsibility. You can say, okay, this is a losing trade, but I wouldn't have, it's not my system, it is because of the other trader. He said that it was a good trade. I ended up taking it anyway, which was a mistake, but I'm not the one to blame, because my system would not have generated this trade. Very, very bad spot, because you give away responsibility, and as a trader, you have to always take full responsibility for all your action. In the end, No one really cares if you make money or if you lose money. The only person that you have to confront every day is yourself. And if you rely on someone else's opinion, you should not call yourself a trader, because that's not what you really are. You are looking for excuses. You're trying to rely on someone else without really putting in the work, without taking the responsibility that a trader has to take if you want to grow. When you have stress in your personal life, this should be obvious, but it is often not. If you have problems at work, or if you have health issues, if you have stress with your spouse, with your kids, that's not a good spot to be in when you're trying to trade, because as a trader, trading is a very mandatory and it's a very demanding task. That's what I was looking for. It's very demanding. There's a lot of pressure, and you cannot have the pressure on your personal life and the pressure of the markets where you have real money on the table. If you have those two things, then they don't really match. You will see that if you have stressed, if there's something from your daily life which is still you haven't processed, it is still nagging on you, then you will often end up taking bad trades because you're not really that focused. And this is a little bit of a repetition, but when you just want to end the week green, many traders, they set themselves random performance goals. So they say, okay, every week I have to make X% of return, every month I have to make X%, or this is not good. First, those performance goals are usually set completely random, and also they are usually based on the trader then makes some analysis and calculations. Okay, I have 10,000 US dollar or 1,000 or whatever, and I need to make 20% every week or every month so that I will end up with 1 million after a year. I know we have all done that, and it's quite normal, especially in the beginning, if you think that, oh yeah, I will just be a Forex trader or a trader, and then soon I will have a lot of money. It's not how trading works. You cannot control how many trades you will get per week. You cannot control of those trades how many will end up in a profit or in a loss. There are different market conditions. Sometimes you will end up with a bunch of winners. Sometimes the trades, even the best setups, will not work out. And it's very important that you stay open to what the market is giving you. You don't try to grab it. You don't try to force a winning trade. And don't set yourself performance goals, especially not over the short term. Weekly or monthly goals should be avoided because you end up adding a lot of pressure where no pressure is actually needed. You need to stay open, take what the market is giving you, only trade the best setups, and then you will be fine, hopefully, most of the time. And I think this is a very good 10-step approach. I'm sure that you will find yourself among 1, 2, 3, 4, maybe all of those points, and I hope you can use that to get yourself into a mindset where you trade less, be more focused, have a better process, and then you will end up taking better trades, and your performance will thank you. You will have less variance, the account will not grow or will not move so erratic, and this will then have many other positive effects on your emotions, and this will then enforce it, and it will have a spiraling effect on your future performance. And of course, if you have any questions, there's a link in you can just post a comment under the video, and I'm very happy to help out. If you like this, give me a thumbs up, and if there's anything else I can do for you, just let me know. Happy trading, and see you in the next video.